Guest because we have a noted hedge fund manager who started worrying about DeepSeek around Christmas time. So let's bring in Dan Niles of Niles Investment Management. He was a semiconductor and computer hardware analyst. So again, tying everything together during the dot-com bubble. I know, Dan, obviously this is something that you brought up as a concern. So when you started to hear the news, it probably didn't feel as shocking to you as it did maybe to some of the rest of us. But how are you thinking through the action that you saw today and what you think we should be aware of as investors and traders moving forward this week?
Well, I think it's more than just this week. So I've been talking about the fact that I expect an AI digestion phase in 2025 since probably mid-year. And there have been a lot of data points along that way, where if you think about it, Microsoft, which has the 49% economic interest in OpenAI, when they reported their June quarter, they guided revenues below the street for the September quarter. Then they reported the September quarter, they guided revenues below the street for the December quarter. And then when Microsoft's CEO was asked in December, are you supply constrained? He said, well, I'm power constrained, but I'm not chip supply constrained. So, and then you had Ilya Sutskever, founder of OpenAI, saying back in November, I think, that we've already trained on all the data on the internet. So training scaling is basically dead. So you've had a lot of data points leading up to this point. And when I initially saw the DeepSeek data it was released on Christmas Day, I was like, yeah, there's no way they trained on it for that little. And then as I talked to contacts in Silicon Valley, because don't forget, this came out on Christmas Day, right? Everybody's on vacation, we're all enjoying New Year's, etc. It became increasingly clear that they had made some fundamental improvements in the way to approach this, whether it's distillation or mixture of experts, partial activation, or I'm not going to get into all the technical stuff, but bottom line, they did make some big software improvements. And from what I heard, everybody, because it's open sourced, was looking at it saying, hey, how can we incorporate some of this into our models? Because don't forget, it's not like OpenAI came out of not having the benefit of Google, which you could argue invented transformers or did a lot of the early work. They just didn't commercialize it, which OpenAI did. So all of this stuff builds one on top of the other. And what it gets down to is, I don't think there's any chance that Nvidia, and I've said this before, does revenues up 50% this year, because whether it's Microsoft cutting back on CapEx, because don't forget, they said they're going to spend $80 billion this fiscal year. Well, if you do the math, they spent $20 billion in September. They said that's up in December. Their fiscal year ends in June, which means the first half of 2025, CapEx spending is down from the back half of 2024, and it's been growing at 70 to 80% for a year and a half. That's a very big change when the largest spender on AI is going from growing 70 to 80% to not growing at all.
So I understand that you don't believe in Nvidia necessarily, or at least you don't believe that the revenue growth they'll have is what they've said they will have. What about some other names? Names like Meta, for instance, which was up today with all of this. I understand that's a name that you like. What are you thinking about that name and how this plays out?
Yeah, and to be clear, Nvidia's never guided for this year. They only guide 1 quarter in advance, but that's what the analysts have out there, and I just don't think those numbers are achievable. But you're correct. The thing you should look at, and I talked about this on Friday in something I posted, which is, look, you have to look at the stuff this benefits, because when you lower hardware costs, it really helps with the software that's sitting on top of it. Mm-hmm. And also guys that use AI. So Meta uses AI to figure out, hey, this is the video that Courtney would like to watch, and oh, these are the ads she's willing to engage with. And they use AI to help with that, which is why their numbers went up so much last year. Mm-hmm. And so that's one of the names that I think will benefit. And funnily enough, a name like, you look at the software names, they're also going to benefit a lot. And so those are areas that we've been swapping into in mm-hmm. terms of our likes versus dislikes. And mm-hmm. if you go further back to the internet bubble, originally you had all the hardware stuff take it up. So, Cisco, Ciena, et cetera. And then you went through this 78% crushing in the NASDAQ. And what were the biggest companies that came out of that? Well, the ones that used all those lower hardware costs, like an Amazon, for example. And so I think you're going to see the same thing play out over a number of years. And by the way, I think Nvidia, revenues will grow. It's just going to grow slower than a lot of people anticipate. But I think the value is really going to be in the software guys that go, okay, these are the changes I can make. And how can I ride on all of this investment that's happened underneath it? Much like dark fiber did not turn out to be what everybody thought back in the internet bubble, and you went through a crushing, but that crushing was great because all the guys that built on top of all that dark fiber overspend did very, very well.